What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we are officially at the bear market resistance trend line, which means the bulls are battling the big bad bear. Will the bulls have what it takes to break out, or will we see a rejection from critical resistance? First up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today in SPY we were down 0.18%, and we could see from the price action that we are officially battling the big bad bear, which is waiting right up there at 399 to 400. Intraday the high was just about a quarter above 400, and we instantly found selling pressure at that level, which should be no surprise because there is going to be critical bear market resistance right there at that resistance. So the question from here is whether or not the bulls are going to have what it takes to break that resistance at 400, and we're not making any predictions about whether or not the bulls are going to do so, even though there's a very good chance the bulls need to get a pullback to a higher low before they go defeat the big bad bear. Now keep in mind we are letting the price action do all of the talking, so if the price action breaks through that critical resistance, we instantly need to get more bullish. That SPY is likely running to about 408 to 414. There is no way if we get a bullish price action breakout above bear market resistance that we are going to just remain bearish when the price action is clearly saying something else is happening. However, we have not had the official breakout of the bear market resistance, so if you did want to take a low risk, high reward ratio short setup, this is going to be the resistance to do that from. That doesn't guarantee you'll make a profit, but you instantly know you're wrong if SPY starts closing back over 400. So there is very likely going to be a lot of bears that take this favorable risk reward ratio, which likely increases the selling pressure we are going to see at this critical bear market resistance. That's just a matter of order flow. If there's too many sellers and not enough buyers, we're going lower, and it's just as simple as that, so don't overthink it. So I do think there's a very good chance SPY does get rejected from this resistance and at least comes down around this gap fill zone between 390 to 391. From there, the bulls are going to have a ton of support because that was the first resistance the bulls had to break above, and then the bulls can push back towards the resistance after cooling down for a little bit and possibly even recruiting some bears that they can short squeeze through resistance. So my favorite scenario, and keep in mind my favorite scenario doesn't mean anything because the market couldn't care less what I think, but I do favor the fact that we need a little bit of a pullback before we go any higher, but we instantly need to get more bullish once we break SPY 400. On the Nasdaq 100 triple Qs, we were up 0.2% today, and the triple Qs got very close to closing that gap just above 283, but did not fully close that gap. There was just way too much selling pressure near that gap fill, and it was outside the upper Bollinger Band, so the bulls may try to go fill that gap tomorrow, or the bears are going to push the bulls back down through this support zone at 280, which means the triple Qs are likely coming back down to 276 or the gap fill at 273. The bull breakout will be above that gap fill at 283 and the bear market resistance trend line between 286 and 288, and that is where the big bad bear is waiting in the triple Qs. On the Dow Jones, we were down 1.13% today, and the Dow Jones was outside the upper Bollinger Band for 2 days in a row, and today it paid for it because it was just getting too far extended, and we're pulling back down below the 5 EMA. Critical support in the Dow Jones is going to be between 334 and 336, with the critical resistance up here at 346. If we continue lower and take out the low, you're also going to have resistance around 343, and if we break down through the critical support at 334, we're likely coming all the way back down to about 325. On the Russell 2000 IWM ETF, we were down 0.12%, and we're outside the upper Bollinger Band for the 4th day in a row, and we're getting very close to critical resistance up here at 188, so I do think it's a very good chance the small caps are due for a cool down. The critical resistance and also your risk level to short from is up here at 188, and if we start to pull back, we will be looking for a pullback down to about 185 all the way down to about 182. And if we break all of that support, we'll be looking for the gap fill just below 181. If we do get a bull breakout above 188, we'll very likely start trending higher towards 195. On the ARKK ETF, we were up 2.92% today as ARKK is now outside the upper Bollinger Band for the 3rd day, and we're getting very close to that critical resistance at 38, and then above 38, we'll be looking for a run up to about 40.4. We are getting a little overextended, so don't be surprised if we start to get a pullback back down towards the breakout at 34.6, and then below that, we could come all the way down to 32.5 and the gap fill at 31.68. On the VIX, we closed around 19.35 today, so we're still down below this level at 20, and this is exactly where the VIX has been spiking during the bear market. But if we get the bull breakout above the bear market resistance trend line and the VIX stays down below 20, we are more than likely starting into a bull trend. Remember, the VIX is low fear if we're below 20, so that is more in line with a bull trend, because during a bull trend, we expect to see the VIX down below 20. If the VIX spikes out above 20 and starts heading back up towards 24, then we're likely getting a bear market rejection and continuing lower. On Bitcoin, we're currently trading just above 21,000, and we did get that bull breakout above the 200 daily moving average last week, and we did hold above that level over the weekend as we are starting to build up a bull trend. So on Bitcoin, you can stay bullish above 19,500 or the risk level down here at 19,000. Because above that level, we are likely heading into a bull trend, which means Bitcoin is likely going higher. Now, this is getting too far overextended, and we do have resistance right here, right around 21,300. So don't be surprised if we see sellers at this level after this very nice bull run and continue to see a little bit of a dip to put in a higher low. If we get the bull breakout above 21,300, the next resistance will be at 22,409. On Amazon, we were down 2.11% today, and Amazon is just getting way too far outside the upper Bollinger Band and was due for a cool down, and we are back down below the support at 96. Below 96, we could come back down towards the 50 EMA at 93.5, and below that, we could fill the gap right around 90. If we continue higher and we take out this previous resistance at 98, look for the next strong resistance at 102 and the gap fill at 110. On Microsoft stock, we were up 0.47% today, and we did get a close back over the 50 EMA, but we are still below the critical resistance level of 242, which means we could still be heading lower. Above 242, we have resistance at 245, and then above that, we could run back up to 252. If we get rejected, look for downside support right around 236, and then below that, we could come all the way down to the gap fill right around 225. On Nvidia stock, we were up 4.75% today, and Nvidia had a very bullish day after that bull breakout above the resistance at 167, and we sliced right through the gap at 174 and closed outside the upper Bollinger Band. From here, you're looking for resistance at 179, and then above that, we could start running back up towards 186 to 192. Now that we have the bull breakout, we could look for support down here right around 166, and if we break below 166, we still have that very critical support down here at 156. On Tesla stock, we were up 7.43% today, and Tesla did get that bull breakout above 123, which is likely going to trigger the short squeeze. Remember, I told you weekly critical support is 107, and we were seeing very high volume buying at that level. And even though we were getting high volume buying, we had shorts continuing to enter into this stock. So now they're going to become net buyers as they get squeezed to higher prices, which means Tesla is very likely heading straight up to 138 before we find the next very critical resistance. However, that doesn't mean we can't see a pullback, and we did get the breakout, which means we could retest the breakout and fill this gap down here right around 123. But as long as 123 holds as support, we are very likely going to see Tesla continuing to push higher. Below 123, this was a false breakout short squeeze, and we could come down to fill the gap at 114. But so far, this is looking very bullish on high volume buying, which means we are likely heading higher. Above 138, the next upside price target will be 155, and there is still a very good chance this turns into a V-shaped recovery due to the fact that this was likely capitulation. On Apple stock, we were up 0.88% today, and Apple is right up against the bear market critical resistance, which is between 138 and about 140. This is going to be very critical resistance, and it will get Apple back over the 50 EMA if we get the breakout, but the upper Bollinger Band is getting very squeezed, and we're likely not going to see Apple able to push too much higher without a cool down. So look for strong resistance in Apple right here at 138, and critical support is now 135 and the 20 daily moving average at 131. And if we break all of that support, we could revisit the lows around 125 to 126. On the financials, we were down 0.66% today, and we still have the bull trend with the bull price action, so there's no reason to be overly bearish in the financial sector. The industrials were down 0.85% today, back down below the 5 EMA, but still in a bull trend, so you can stay bullish on the industrials as long as we're above 100. The healthcare sector was down 0.47%, still holding that critical support at 134, but still trading below a negatively sloping 20 daily moving average. The energy sector was up 0.21% today, with the price action back over all the moving averages and developing the bull trend with the next upside resistance up here at 92. So jumping back over to the SP 500, there's a very good chance the bears make a stand here. And there's a very good chance we see a couple of days of cooling down before the bulls continue to push higher to battle the big bad bear. Everything looks a little too far extended in the short term, which means we're likely due for a cool down. but we instantly need to get more bullish if we slice right through the bear market resistance because we are likely going to see higher prices. So just be prepared to follow the price action and make sure you don't have any bias, because if we're going back into a bull trend and you have a bear bias, you are going to miss out on a lot of the rally. So be unbiased and let the price action guide you, and right now we can go either direction, so we need to wait for the confirmation of the price action breaking above the bear market resistance trend line, or we are very likely going to continue to go lower. So it's a great time to be patient and sit in cash or be shorting the market from the bear market resistance. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank Trade Alerts or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, come join us over at the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.